Bitcoin just had one of its roughest days of the year, down more than 6%, falling to $99,000 for the first time since June. That makes this the second worst session of 2025 and the deepest drawdown since last month's liquidation event. We're now 20 months off the highs, a number that in equity markets would signal the start of a bear market. For Bitcoin, though, this is typical of a bull market drawdown. In fact, as you can see on this chart here, we've already weathered two separate 30% drawdowns during this bull run. So this may not be a market that's losing conviction. In fact, it may just be a continuation of what we've seen all year, which is a transfer of Bitcoin's ownership base from the old guard to the new guard. So here's what's really going on. Over the last few months, and in fact for the entire year, Bitcoin has traded sideways while everything else, the S&P, NASDAQ, and even gold pushed higher. You can see here on this chart, year-to-date returns tell the story. Bitcoin is up just over 6%, while the NASDAQ has gained over 21%, and the S&P 500 has gained over 15%. Normally, that kind of divergence would suggest fading liquidity or weaker risk appetite, but that's not what the data shows. This is where a great Substack post that was written over the weekend by Jordi Visser comes in, and it's one of the best explanations for the entire year of 2025. He describes this phase as Bitcoin's silent IPO, a period when early holders, the ones who mined or accumulated in the early 2010s, are finally distributing their positions into a deep, liquid market for the first time. This isn't panic selling, it's the natural evolution of an asset that's reached maturity. After 15 years, Bitcoin finally has the infrastructure to absorb institutional scale exits. ETFs, custodians, and balance sheets ready to take the other side of the bid. That process looks like boredom to most people. Months of chop, every rally capped by fresh supply, but under the surface, it's the most important transition that Bitcoin has ever undergone. A transfer of ownership from concentrated hands to distributed ones. If you take a look at on-chain activity, you can see it happening. Dormant coins that haven't moved in a decade are finally happening. Addresses linked to early miners and OG wallets are slowly feeding into the market. Not in size that crashes price, but steady enough to suppress it. And that steady pressure is being met, more or less, by a bid on the other side. That's what defines this phase. It's a distribution from the old guard to the new guard. For every seller looking to liquidate their position, there's a new participant stepping in for the long haul. That's how a volatile, thin market evolves into a durable monetary base, not through explosive rallies, but through digestion. And make no mistake, it is digestion. The RSI tells us Bitcoin is at its most oversold level since April, when the last leg of the bull run began. Every drawdown this cycle, 30%, 35%, and now 20%, has built support rather than destroyed it. That's the pattern of a market that's still in its expansion phase rather than one that's topped out. Now, that doesn't mean Bitcoin is immune from macro risks. Of course, in fact, it's extremely correlated to them. If equities experienced a prolonged drawdown, or if funding markets show signs of new stress, Bitcoin will feel it. And if we spend too much time below $100,000, that could suggest the distribution isn't done, and perhaps we are in for a bull market reversal into a bear market. But the broader environment still favors higher prices over the next several months, as the Fed eases monetary conditions and looks to cut rates over the next several months. So when you zoom out, the story of 2025 isn't one of decline, it's one of transition. Bitcoin is moving from its founding generation to its institutional generation. The people who took the biggest risks are realizing their gains, and the buyers stepping in now are doing so with multi-decade horizons. That handoff is frustrating to live through, it always is, but it's what creates the foundation for the next phase of the cycle. Every time Bitcoin has absorbed a major redistribution of supply, it's come out the other side stronger, more stable, and less volatile. This is what that process looks like in real time. It's slow, it's uneven, and it's psychologically draining, but once it's finished, it unlocks the next leg higher. Because the marginal seller is gone, and what's left is a base of holders who don't need to sell. Right now, the market is exhausting that final cohort, and if the trend holds, the quiet phase we're in today is setting the stage for the next breakout rather than the end of one. The silent IPO that Bitcoin's going through right now is a growing pain, but it's also the proof that it's becoming what it was designed to be, which is a global, widely held monetary asset. That's all for today's video. Thanks so much for watching. If you enjoyed, make sure to like and follow for more and reshare so more people can see this. And of course, check out Horizon. Horizon lets you buy Bitcoin using your home's equity without new debt, monthly payments, interest charges, or term limits. To learn more and see if you qualify, visit joinhorizon.com or scan the QR code right there. That's all for today's video. Thanks again for watching. I'll talk to you soon.